Given the price history and forecast for Bitcoin, a short-term bullish strategy appears promising. The recent price action shows consolidation around the $102,000 level, with the forecast indicating a gradual upward movement towards $103,000. This suggests a potential buying opportunity for a short-term trade. To implement this strategy, we can enter a long position at the current price of $102,000. Setting a stop loss at $101,000 would protect against any unexpected downside movement. Our target price would be $103,000, aiming to capitalize on the predicted price increase. This strategy allows us to participate in the potential upside movement while managing risk effectively. Based on the provided information for Bitcoin Cash, a cautious investment strategy with a medium-term perspective appears most suitable. The 2-week price history reveals a volatile trend with both upward and downward movements, while the forecast suggests a slight decline over the next week. The price is currently near the support level of $410.20, indicating a potential for a bounce back. However, the resistance level at $424.90 presents a significant hurdle for a substantial upward movement. Considering this outlook, a long position could be considered, aiming to capitalize on a potential rebound towards the resistance level. An entry price around $415 would allow you to buy in at a relatively low point, while a stop loss at $410 would protect against a deeper decline. The target price could be set at $425, aiming to capture a reasonable profit if the price manages to overcome the resistance. This strategy balances the risk of a short-term decline with the potential for medium-term gains, aligning with a cautious approach in the current market conditions. Based on the provided price history and forecast for stacks, a short-term bearish strategy appears to be the most suitable. The price history shows a clear downtrend over the past 2 weeks, and the forecast suggests this downward momentum will continue. While the support price of $1.227 offers a potential floor, the resistance price of $1.326 suggests limited upside potential. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current price around $1.30. A stop-loss order should be placed at $1.33 to minimize potential losses if the price unexpectedly surges. The target price for this short position could be set at $1.20, aiming to capitalize on the anticipated price decline. This strategy leverages the current bearish trend and aims to profit from the expected further decrease in Stacks' price within the short term. Given the historical price fluctuations and the forecast for Ethereum, a medium-term investment strategy appears to be the most prudent approach. The historical price data reveals a volatile trend with both upward and downward movements. While the forecast suggests a slight increase in price over the next week, the recent dip below $3,200 indicates potential for further consolidation or even a slight decline. Therefore, a cautious long position is recommended. A suitable entry price would be around $3,150, considering the current price and the recent dip. The stop loss should be placed at $3,100 to mitigate potential losses in case the price drops further. The target price could be set at $3,350, aiming to capitalize on the forecast's upward momentum. This strategy allows for a balanced approach, taking advantage of potential upside while managing risk through a well-defined stop loss. Given the price trends and forecast for Ripple, a medium-term investment strategy appears most suitable. While the historical price data shows some volatility, the forecast suggests a slight upward trend over the coming week. The current price is hovering near the support level of $2.6649, indicating a potential for a rebound. Therefore, a long position is recommended to capitalize on this potential upward movement. An ideal entry price would be around $2.97, aligning with the recent price dip and offering a margin of safety below the current price. A stop loss should be placed at $2.68 to protect against any unexpected price drops below the support level. The target price could be set at $3.1, aiming to capture a potential 5% gain as the price moves towards the resistance level of $3.0202. This strategy allows for a balanced approach, leveraging the potential for upside while managing risk effectively. Based on the provided price data for Binance Coin, a short-term investment strategy appears to be the most suitable approach. The historical price data shows a recent decline, and the forecast indicates further downward movement in the coming week. The price is currently hovering near the support level of $661.26, suggesting a potential for a short squeeze before the price continues its downward trajectory. Therefore, an aggressive short-term investment strategy would involve taking a short position on Binance Coin. The entry price should be set at $670, slightly above the current price, to account for potential volatility. The stop loss should be placed at $678, above the recent high and the resistance level of $685.69, to minimize risk. The target price should be set at $655, below the support level and in line with the forecast, allowing for potential profit capture before the price reaches major support. Based on the provided historical price data and forecast for Stellar, a cautious investment strategy with a medium-term perspective appears most suitable. The historical prices show some volatility, with a slight downward trend in recent weeks. However, the forecast indicates a potential for a modest rebound in the coming week. The support price at $0.3497 provides a strong base for potential price recovery, while the resistance at $0.4057 suggests that significant upward momentum might be limited in the short term. Therefore, a long position on Stellar could be considered, with an entry price around $0.395. This allows for a margin of safety below the current price and provides room for potential upside movement towards the resistance level. A stop loss should be placed at $0.3497, aligning with the support price and mitigating potential losses in case of a further price decline. The target price could be set at $0.405, aiming to capture a portion of the potential upside while avoiding overexposure to the risk of a price reversal. This medium-term approach allows for potential profit while managing risk effectively. Based on the provided Toncoin price information, a cautious investment strategy with a short-term perspective appears most suitable. The 2-week price history demonstrates a slight downward trend, and the forecast indicates continued decline. The current price is hovering near the support level, suggesting potential for further downward movement. Therefore, a short position on Toncoin is recommended. An entry price of $4.85 aligns with the current price and the forecast's downward trajectory. A stop loss should be set at $4.93, slightly above the current price, to limit potential losses. The target price for this short position is $4.73, aligning with the forecast's lowest predicted price, allowing for profit taking before the price potentially reaches the support level. Based on the provided Cardano price information, a conservative investment strategy would focus on a short-term approach. The historical prices show a slight downward trend over the past 2 weeks, with the forecast indicating further declines. The current price is near the resistance level of $0.9497, suggesting a potential for a pullback. Therefore, a short position is recommended to capitalize on this anticipated decline. An entry price of $0.935, slightly above the current price, allows for a small margin of safety. The stop loss should be set at 95 cents, above the resistance level, to protect against unexpected price surges. The target price can be set at 91 cents, aligning with the lower end of the forecast and offering a reasonable profit potential. This strategy allows for a short-term investment horizon, aiming to capitalize on the anticipated price correction before potential upward momentum resumes. Given the price trends and forecast for Litecoin, an investment strategy focused on a medium-term approach appears to be most suitable. The historical prices demonstrate a general upward trend, with the recent price hovering near the support price of $109.90. The forecast suggests a continued upward movement, with prices potentially reaching $135 within the next week. This indicates a bullish outlook for Litecoin in the short to medium term. Therefore, a long position is recommended. An entry price of $118 aligns with the current price and the support level. The stop loss should be set at $110 to protect against potential downside risks. The target price should be set at $130, aiming to capitalize on the forecast price increase while leaving room for potential fluctuations. This strategy allows for a balanced approach, capitalizing on the bullish momentum while mitigating potential losses. Based on the provided information for Doge-Coin, a short-term investment strategy appears most suitable. The 2-week price change showcases a downward trend, aligning with the 1-week forecast, which predicts further declines. The support price at $3.6522 indicates a potential floor for the price, while the resistance at $4.0892 suggests limited upside potential. Therefore, a short position on Doge-Coin is recommended. An entry price around $3.95 would allow for capturing potential downward momentum. A stop loss should be placed at $4.05 to minimize risk in case the price unexpectedly rises. The target price could be set at $3.65, aiming to profit from the anticipated price decline towards the support level. This short-term strategy capitalizes on the bearish outlook indicated by both historical price data and the 1-week forecast. Based on the provided Aptos price information, a cautious investment strategy is recommended. The 2-week price change reveals a downward trend, and the forecast suggests continued decline. The support price at $7.21 serves as a crucial level to watch, as a break below this level could accelerate the downward movement. Therefore, a short position on Aptos is advisable. An entry price of $7.42 aligns with the current price and the forecast, allowing for potential profit as the price falls towards the support level. The stop loss should be set at $7.55 to limit potential losses if the price unexpectedly rebounds. The target price should be set at $7.15, aiming to capture a significant portion of the anticipated decline. This strategy emphasizes risk management and capital preservation, seeking modest gains in a potentially volatile market. SE's recent price history shows a downtrend, with the forecast predicting further declines in the coming week. The price is currently hovering near its support level, suggesting potential for a bounce. However, the bearish momentum and the forecast suggest that the downtrend might continue. Therefore, a short-term short position seems to be the most suitable strategy. An entry price of $0.325 could be considered, aligning with the current price and the forecasted decline. A stop loss at $0.333 would protect against any unexpected upward movement, while a target price of $0.295, slightly above the support level, allows for potential profit before reaching the critical support. This strategy capitalizes on the anticipated decline in SE's price within a short time frame, aiming to secure profits before the price potentially stabilizes or rebounds. Based on the provided Ethereum Classic price information, a cautious investment strategy with a medium-term perspective appears most suitable. The historical price data shows a slight downward trend, with the recent price hovering around $25. The forecast suggests a continuation of this trend, with prices expected to remain relatively stable around $25 for the next week. However, the support price at $24.58 indicates a potential floor for the price, suggesting that a significant drop is unlikely. Therefore, a long position could be considered with a cautious approach. An entry price around $24.80 would allow for some room for price fluctuation before reaching the target price. The stop loss should be set slightly below the support price at $24.50 to minimize potential losses. A target price of $26.12, aligning with the resistance level, would provide a reasonable upside potential while mitigating risk. This strategy aims to capitalize on a potential price rebound within a medium-term timeframe, taking advantage of the support level and the forecast's indication of stability. The provided price information for Polygon suggests a bearish trend in the short to medium term. The recent 2-week price history shows a consistent decline, and the forecast predicts further drops in price. While the support price of $0.3901 offers a potential floor, the resistance level of $0.4176 indicates a strong barrier for upward movement. Considering this downward momentum and the forecast, a short-term investment strategy focused on a short position appears most suitable. An aggressive entry point for this strategy would be at the current price, around $0.407, aligning with the forecasted price. A stop loss should be placed above the recent high of $0.453 to mitigate risk in case of an unexpected price surge. The target price should be set at $0.3901, aiming to capture potential profit before the price reaches the support level. This strategy capitalizes on the anticipated decline while managing risk through a well-defined stop-loss order. Given the price trends and forecast for AEVO, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the current price near the support level of $0.2407 and the forecast suggesting further declines. The resistance is at 27 cents, indicating that an upward movement is unlikely in the near term. In this scenario, a short position is advisable to capitalize on the potential for a price decrease. For an aggressive short-term investment strategy, an entry price of $0.268 could be considered, aligning with the recent price action and the forecasted decline. The stop loss should be set at 27 cents to protect against any unexpected price recovery. The target price should be set at 24 cents, slightly above the support level, allowing you to take profits before the market potentially bounces off the support. This strategy aims to capitalize on the short-term bearish momentum while managing risk through a tight stop loss. Based on the provided price information for optimism, the 2-week price history and 1-week forecast suggest a bearish trend. The historical prices show a consistent downward movement, reaching as low as $1.37 in the past 2 weeks. The forecast further predicts a continued decline, with prices potentially dropping to $1.30. This indicates that the market sentiment for optimism is currently negative, with selling pressure outweighing buying pressure. Considering this bearish outlook, a short-term investment strategy focused on a short position appears most suitable. An ideal entry price would be around $1.42, slightly above the current price and close to the recent support level. The stop loss should be set at $1.469, the resistance level, to limit potential losses if the price unexpectedly reverses. The target price could be set at $1.369, the support level, aiming to capitalize on the anticipated decline. This strategy allows for a potential profit while mitigating risk by defining clear entry, stop loss, and target prices. STRK's recent price history shows fluctuations around a general downtrend. The forecast predicts further price decline over the next week, aligning with this bearish sentiment. Considering the support price of $0.3239 and the resistance price of $0.3623, a short-term investment strategy focusing on the short side appears to be more suitable. A strategic entry point for a short position could be around $0.356, slightly above the current price, allowing for a small buffer against potential price fluctuations. The stop loss should be placed at $0.3623, the resistance level, to limit potential losses if the price unexpectedly surges. The target price could be set at $0.324, below the support price, aiming to capitalize on the predicted price decline. This strategy emphasizes a short-term outlook, capitalizing on the anticipated downward movement of STRK within the next week. Given the price trends and forecast for Solana, a cautious investment strategy would focus on a short-term approach to capitalize on the potential for a price correction. The historical prices show a fluctuating trend with recent dips, and the forecast suggests a slight downward movement in the coming week. While the support price of $213.67 provides a potential floor, the resistance at $238.98 indicates a ceiling for potential upward movement. Therefore, a short position is advisable to take advantage of the anticipated price decline. An entry price of $235, aligning with the recent highs and the forecast, would be suitable. The stop loss should be set at $240 to protect against any unexpected price surge. The target price should be set at $220, aiming to capture a significant portion of the potential downside before the price potentially rebounds towards the support level. This strategy allows for a limited risk, potentially high reward opportunity in the short term. Based on the provided data for Jupiter, a short-term investment strategy appears most suitable. The historical price data reveals a volatile trend with both upward and downward movements. The recent price has been fluctuating around $1, indicating a potential for further short-term fluctuations. The forecast suggests a slight decline in price over the next week, reaching a low of approximately 96 cents. This aligns with the historical price fluctuations and suggests an opportunity to capitalize on a potential short-term dip. Therefore, a short position on Jupiter is recommended for a short-term investment perspective. An entry price around $1.03, slightly above the current price, allows for a small margin of safety. The stop loss should be set at $1.08, protecting against any unexpected upward price movement. The target price should be set at 97 cents, aiming to capture a portion of the anticipated price decline. This strategy capitalizes on the short-term volatility of Jupiter while managing risk through a defined stop loss. Based on the provided information for Render, a short-term bearish investment strategy appears most suitable. The 2-week price history demonstrates a clear downward trend, culminating in a significant drop towards the end of the period. This downward momentum is further supported by the forecast, which predicts continued price declines over the next week. The forecast suggests that Render could fall below its current price, reaching a low point near the support level of $5.47. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current market price. A stop-loss order should be placed above the current price to limit potential losses in case of an unexpected price surge. The target price should be set at $5.47, aiming to capture the anticipated price decline and reach the support level. This strategy capitalizes on the prevailing bearish sentiment and the forecast indicating further price drops in Render. Given the historical price data and the 1-week forecast for Solana name service, a short-term bearish strategy appears most suitable. The historical prices show a consistent downward trend over the past 2 weeks, with the price dropping from $0.234 to $0.184. The forecast further anticipates a decline, with prices potentially reaching as low as $0.188. This downward momentum, coupled with the support price at $0.1844, suggests a high probability of continued price decline in the short term. Therefore, an aggressive short-term investment strategy would involve entering a short position at $0.195, the first price in the forecast. The stop loss should be placed at $0.201, slightly above the current price and the resistance level, to minimize potential losses if the price unexpectedly rises. The target price for this strategy should be set at $0.184, aligning with the support price and aiming to capture the anticipated price decline. This strategy capitalizes on the bearish sentiment and the forecast prediction of further price drops, aiming for a quick profit within a short time frame. Given the price trends and forecast for Doge-Coin, a conservative investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the forecast indicating further declines. The forecast suggests Doge-Coin could drop from its current price to as low as $0.315 in the next week, while the support price sits at $0.3189 and resistance at $0.33686. This indicates a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. For an aggressive short-term investment strategy, an entry price of $0.325 would be ideal, aligning with the forecasted price. The stop loss should be set at $0.330 to protect against any unexpected price recovery. The target price should be set at $0.315, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $0.3189. Remember, this strategy carries a higher risk due to its short-term nature and bearish outlook. Given the price trends and forecast for PEPE, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the current price close to its forecast and near the support level. The resistance is at $0.0000138, indicating that there is limited room for upward movement. In this scenario, a short position is advisable to capitalize on the potential for a price decrease towards the support level. For an aggressive short-term investment strategy, an entry price of $0.0000130 would be ideal, aligning with the forecasted price. The stop loss should be set at $0.0000138 to protect against any unexpected price recovery. The target price should be set at $0.0000115, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $0.0000115. This strategy aims to capitalize on the anticipated decline in prices, while managing risk through a defined stop loss. Given the current price trends and forecast for SHIB, a short-term investment strategy focusing on a short position appears to be the most prudent approach. The historical price data reveals a downward trend, and the forecast indicates a continued decline in the coming week. The current price is hovering near the resistance level of $0.0000190, suggesting a potential for further downward movement. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current market price, with a stop loss set at $0.0000188 to limit potential losses. The target price should be set at $0.0000179, aiming to capitalize on the forecasted decline. This strategy leverages the anticipated price drop while managing risk through a well-defined stop loss. Based on the provided data for DOG-COIN, a short-term bearish investment strategy appears most suitable. The 2-week price change demonstrates a downward trend, and the forecast predicts further declines. The historical prices show a consistent downward movement, with the price currently hovering near the support level of $1.058. This suggests a potential for further price drops towards the predicted lows. Therefore, a short position on DOG-COIN is recommended. An aggressive entry price could be $1.18, aligning with the current price and the resistance level. The stop loss should be set at $1.20, protecting against unexpected price surges. The target price should be $1.04, the lowest predicted price in the forecast, allowing for a potential profit before the market potentially finds support. This strategy capitalizes on the bearish momentum and aims to profit from the anticipated price decline in the short term. First, considering the historical price trend of Doge-Coin, we observe a general downward movement over the past 2 weeks. The forecast also suggests a continued decline in the coming week. This bearish outlook, coupled with the price being near its support level of $0.004078, indicates a potential opportunity for a short position. Therefore, an investment strategy for Doge-Coin involves taking a short position with a medium-term perspective. We can enter a short position at $0.00442, which is slightly above the current price and close to the recent resistance level. The stop loss should be set at $0.004553, the recent resistance level, to limit potential losses if the price unexpectedly rises. The target price can be set at $0.004078, the support level, aiming to capture the potential downside movement. This strategy allows us to capitalize on the anticipated price decline while managing risk effectively. Based on the provided price data for NEAR protocol, a cautious investment strategy is recommended. The 2-week price change reveals a downward trend, and the forecast predicts continued declines. While the support price sits at $4.274, the resistance at $4.658 suggests limited upward potential. Considering this bearish outlook, a short position appears more suitable for capitalizing on the anticipated price decrease. An entry price of $4.48, aligning with the first forecast price, would allow for entry at a relatively high point within the predicted decline. The stop loss should be set at $4.56, slightly above the entry price, to protect against unexpected price surges. The target price could be set at $4.27, aiming to capture the potential drop to the support level. This strategy prioritizes risk management by minimizing potential losses while aiming for moderate gains within a short-term investment horizon. Given the Internet Computer price history and forecast, a short-term investment strategy focusing on a short position appears to be the most suitable. The historical price data shows a downward trend over the past 2 weeks, with the forecast indicating further declines. The support price at $8.534 suggests a potential floor for the price, while the resistance at $9.79 indicates limited upside potential. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current market price, which is close to the resistance level. A stop loss should be placed above the recent high of $9.27 to protect against unexpected price surges. The target price should be set at the support level of $8.534, aiming to capitalize on the anticipated price decline. This strategy leverages the bearish sentiment indicated by the price trends and forecast, seeking to profit from the potential downward movement in Internet Computer. Given the price trends and forecast for Injective, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend, and the forecast indicates a continuation of this trend. Although the price is close to the support level of $17.57, the resistance level of $20.03 suggests that significant upward movement is unlikely in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. A conservative entry price would be around $19, aligning with the forecast. The stop loss should be set at $20 to protect against any unexpected price surges. The target price could be set at $17.70, slightly above the support level, allowing for a modest profit while minimizing the risk of a sudden reversal. This strategy prioritizes risk management and aims for small, consistent gains in a volatile market. Based on the provided price information for BTC, a cautious investment strategy is recommended. The 2-week price history shows fluctuations with a slight upward trend. However, the 1-week forecast suggests a potential decline in price. This indicates a period of uncertainty and volatility in the short term. Considering these factors, a short-term investment strategy with a focus on capital preservation is advisable. A short position could be considered, aiming to profit from the potential price decline. An entry price around $420 would align with the forecast and allow for potential gains. The stop loss should be set at $435 to limit potential losses if the price unexpectedly rises. The target price could be set at $400, allowing for a reasonable profit margin while acknowledging the possibility of further downward movement. Given the provided price history and forecast for THETA network, a cautious short-term investment strategy is recommended. The historical price data shows a fluctuating trend with no clear upward or downward momentum. The forecast indicates a slight downward movement over the next week, suggesting potential for short-term profit. Therefore, a short position on THETA network is advised. An entry price around $1.93, close to the current price and slightly above the support price, would be suitable. The stop loss should be set at $1.97 to limit potential losses if the price unexpectedly rises. The target price could be set at $1.86, aligning with the lowest forecast price, allowing for a modest profit within a short time frame. This strategy aims to capitalize on the slight downward trend while managing risk effectively. The current price trend of WorldCoin suggests a bearish outlook in the short term. The 2-week price change shows a downward trajectory, and the forecast predicts further declines. The price is currently hovering near the resistance level of $1.926, indicating potential for a pullback. Given this bearish sentiment and the price proximity to resistance, a short position would be the most suitable strategy. To implement this strategy, an entry price of $1.89 would be ideal, allowing for a small margin of safety below the current price. The stop loss should be set at $1.95 to limit potential losses in case of an unexpected price surge. The target price would be $1.65, aligning with the support level and the predicted decline in price. This strategy capitalizes on the anticipated downward momentum while managing risk through a well-defined stop loss. Based on the provided price history and forecast for hooked protocol, a short-term bearish strategy appears to be the most suitable approach. The price history shows a consistent downward trend over the past 2 weeks, and the forecast indicates further declines in the coming week. The support price of $0.2542 suggests a potential floor for the price, while the resistance at $0.2803 highlights the limited upside potential. Given this bearish outlook, opening a short position would allow investors to capitalize on the anticipated price decline. To execute this strategy, an entry price of $0.273, slightly above the current price, would be ideal. This allows for a small margin of safety while still capturing potential downward movement. A stop-loss order should be placed at $0.2803, the resistance level, to limit potential losses if the price unexpectedly surges. The target price could be set at $0.2542, the support level, aiming to capture the full potential downside move. This short-term strategy allows investors to potentially profit from the anticipated price decline in hooked protocol while managing risk through a well-defined stop-loss order. Based on the provided price data for Artificial Superintelligence Alliance, a cautious approach with a short-term investment perspective appears most suitable. While the historical prices demonstrate some volatility, the recent 2-week price change shows a downward trend. The forecast further indicates continued decline, suggesting a bearish outlook for the immediate future. Therefore, an investment strategy involving a short position is recommended. An entry price of $1.02 aligns with the current price and the forecast, allowing you to capitalize on potential downward movement. A stop loss of $1.06 acts as a protective measure, limiting potential losses if the price unexpectedly rises. The target price should be set at $0.989, a level slightly above the historical support price, providing a reasonable profit margin while mitigating the risk of significant price drops. This strategy aims to capitalize on the short-term bearish trend while managing risk through a well-defined stop loss and target price. The current price trend for Polkadot shows a slight downward movement over the past 2 weeks, with the forecast predicting further declines in the short term. While the support price at $6.123 offers a potential floor, the resistance level at $6.405 suggests limited upward potential. Considering this bearish outlook and the forecast, a short-term investment strategy focusing on a short position appears to be more suitable. To implement this strategy, we can set an entry price at $6.31, aligning with the current price and allowing for a small margin of safety. The stop loss should be placed at $6.44, above the recent price high, to limit potential losses if the price unexpectedly rallies. The target price can be set at $6, slightly above the support level and reflecting the anticipated price decline. This strategy aims to capitalize on the short-term bearish momentum of Polkadot, while managing risk through a well-defined stop loss. Based on the provided information for Filecoin, a cautious investment strategy with a medium-term perspective is recommended. The 2-week price history shows a downward trend, suggesting potential for further decline. However, the forecast predicts a slight increase over the next week, indicating a potential short-term bottom. The support price at $4.381 acts as a strong foundation, suggesting it could potentially halt the downward trend. Therefore, a long position is considered, aiming to capitalize on the potential price rebound. An entry price of $4.50, slightly above the current price and below the resistance level, is advisable. The stop loss should be placed at $4.39, just below the support price, to limit potential losses. The target price is set at $4.85, aligning with the resistance level and offering a reasonable profit margin. This strategy allows for potential gains while mitigating risk by securing a stop-loss order and targeting a realistic profit level. Conflux shows a relatively stable price history with a recent upward trend. The forecast suggests a continuation of this upward movement over the next week. However, the price is hovering close to its resistance level, indicating potential for a pullback. Given these factors, a short-term investment strategy focusing on a long position with a conservative approach is recommended. An entry price of $0.152 would allow you to capitalize on the upward momentum while minimizing risk. A stop loss at $0.148 would protect your investment in case of a sudden price drop. The target price should be set at $0.161, aiming to capture the potential upside before reaching the resistance level. This strategy allows for a balanced approach, maximizing potential gains while mitigating risks associated with the volatile nature of the cryptocurrency market. Based on the provided information for Ethereum name service, a short-term investment strategy appears most suitable. The recent price history demonstrates volatility, with the price fluctuating around the $33 mark. The forecast suggests a continued downward trend, with prices potentially dipping to $32. This indicates a bearish outlook in the short term. Therefore, an aggressive short-term strategy would involve taking a short position on Ethereum name service. A suitable entry price would be $33, aligning with the current price and the recent price highs. The stop loss should be set at $33.50 to protect against unexpected price surges. The target price should be $31.50, aiming to capture potential price declines towards the support level. This strategy capitalizes on the anticipated downward movement while managing risk through a defined stop loss. Given the 2-week price history and 1-week forecast for Avalanche, a cautious investment strategy is recommended. The historical data shows a volatile period with a slight downward trend, while the forecast indicates continued downward pressure. The support price at $32.09 suggests a potential floor for the price, but the resistance at $34.43 indicates limited upside potential in the near term. Therefore, a short-term short position is advisable. An entry price of $33 would allow you to capitalize on the potential for further price decline. A stop loss at $34 would protect against unexpected upward movements, while a target price of $31 would aim to capture potential profits before the price reaches the support level. This strategy acknowledges the bearish outlook while mitigating risk through a defined stop loss. Based on the provided Bitcoin price information, a cautious investment strategy with a medium-term perspective appears suitable. While the historical price shows some upward movement, the forecast suggests a slight dip in the coming week. The support price at $0.04502 provides a potential floor for the price, while the resistance at $0.05304 indicates an upper limit for near-term gains. Therefore, a long position is recommended with an entry price around $0.046, slightly above the current price. A stop loss should be placed at $0.045, below the support price, to limit potential losses. The target price could be set at $0.048, aiming to capture a moderate gain if the price rebounds towards the resistance level. This strategy allows for potential profit while managing risk by setting a stop loss and targeting a realistic price increase. Based on the provided information for PENDLE, a short-term bearish investment strategy is recommended. The 2-week price history shows a downward trend, with the forecast indicating further declines. The price is currently near its resistance level, suggesting a potential for a pullback. An entry price of $3.55 would allow you to capitalize on a short position as the price moves towards the support level. Setting a stop loss at $3.65 would limit potential losses if the price unexpectedly rises. The target price should be set at $3.20, aiming to capture a significant portion of the anticipated downward movement before reaching the support price. This strategy focuses on taking advantage of the short-term bearish momentum indicated by the price history and forecast. The provided data for the sandbox suggests a bearish outlook in the short term. The 2-week price change demonstrates a downward trend, and the forecast predicts further declines. The current price hovers near the support level of $0.4895, indicating a potential bounce back. However, the resistance level at $0.5292 suggests limited upside potential. Given this scenario, a short-term short position is recommended to capitalize on the anticipated price decline. An entry price of $0.525, close to the resistance level, allows for a quick entry into the trade. The stop loss should be set at $0.535, slightly above the entry price, to minimize potential losses from a sudden price reversal. The target price can be set at 49 cents, below the support level, aiming to capture a significant portion of the anticipated price decline. This strategy focuses on a short-term investment horizon, aiming to profit from the predicted downward movement in the sandbox's price. The current price trend for Decentraland suggests a potential short-term bearish outlook. The 2-week price change shows a downward trajectory, and the forecast indicates further declines in the coming week. While the support price is at $0.4156, the forecast suggests prices could drop below this level. Considering this bearish sentiment and the potential for further price declines, a short-term short position seems like a suitable strategy. To implement this strategy, an entry price of $0.445 would allow you to capitalize on the anticipated price drop. A stop loss at $0.453 would protect against any unexpected upward movement. The target price should be set at $0.415, aiming to profit from the potential decline towards the support level. This strategy focuses on short-term gains by capitalizing on the predicted downward price movement of Decentraland. Based on the provided price history and forecast for ENG coin, a cautious approach with a short-term perspective appears most suitable. The historical data reveals a downward trend over the past 2 weeks, and the forecast predicts continued decline. While the support price at $0.1388 offers a potential floor, the resistance at $0.1551 suggests limited upside potential in the near future. Given this outlook, a short position seems more promising. An optimal entry price for a short position would be around $0.145, aligning with the forecast and allowing for some room for price fluctuation. A stop-loss order should be placed at $0.153 to limit potential losses if the price unexpectedly rallies. The target price for this short position could be set at $0.139, aiming to capitalize on the anticipated downward trend while staying above the support level. This strategy prioritizes risk management and aims to capitalize on the short-term bearish sentiment surrounding ENG coin. The provided data for Uniswap suggests a bearish outlook in the short term. The 2-week price change shows a downward trend, and the forecast indicates further declines. While the support price sits at $11.091, the resistance at $13.137 is relatively distant. This suggests that Uniswap is more likely to move downwards than upwards in the near future. Given this, a short position would be the most suitable strategy to capitalize on the anticipated decline in prices. An aggressive short-term investment strategy could involve entering a short position at $12, aligning with the current price and the recent downtrend. The stop loss should be set at $12.50 to protect against any unexpected price recovery. The target price should be set at $10.50, slightly above the support price, allowing you to take profits before the market hits major support. This strategy leverages the current bearish momentum while managing risk with a well-defined stop loss. Given the historical price data and the forecast for Chainlink, an investment strategy focusing on a short-term approach appears to be the most suitable. The price has been relatively stable in recent weeks, fluctuating around the $24 mark. The forecast suggests a continuation of this sideways movement, with prices hovering around $24 for the next week. Considering the support price at $23.73 and the resistance at $25.09, it appears that a short-term position with a tight stop-loss could be profitable. Therefore, an aggressive investment strategy would involve entering a long position at the current price of $24. A stop-loss order should be placed at $23.73 to minimize potential losses. The target price could be set at $25.09, aiming to capitalize on a potential upward move towards the resistance level. This strategy takes advantage of the limited price volatility and allows for quick profits if the price moves in the anticipated direction. Based on the provided information about Aave, a short-term investment strategy appears to be the most suitable approach. The recent price history demonstrates some volatility, with fluctuations both upward and downward. The forecast suggests a slight upward trend, but the price is currently hovering near its support level of $284.03. This proximity to support, coupled with the potential for modest gains, suggests a short-term investment horizon would be most advantageous. A long position could be considered, with an entry price around $307, a stop loss at $285, and a target price of $318. This strategy capitalizes on the potential for a slight upward move towards the resistance level of $313.81, while the stop loss protects against a significant drop below the support level. This approach aims to capture short-term gains within a volatile market. Given the price trends and forecast for EOS, a cautious investment strategy would focus on a short-term approach. The historical prices show a recent downward trend, with the current price hovering near the support level of $0.7683. The forecast suggests EOS could decline further in the coming week, reaching as low as 76 cents. This indicates a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. For a cautious short-term investment strategy, an entry price of $0.785 would be ideal, aligning with the recent price action and the upper boundary of the predicted decline. The stop loss should be set at $0.797 to protect against any unexpected price recovery. The target price should be set at 75 cents, slightly below the forecasted lowest price, allowing you to take profits before the market hits major support at $0.7683. This strategy aims to minimize risk while still capitalizing on the potential for a short-term price decline in EOS. Given the provided price history, forecast, support, and resistance levels for Tron, a medium-term investment strategy appears to be the most suitable. The historical price data shows a recent consolidation pattern, with prices fluctuating around the 25 cents mark. The forecast indicates a gradual upward trend, suggesting potential for further price appreciation. The support level at $0.2452 provides a solid foundation for a potential bounce, while the resistance level at $0.2977 presents a potential ceiling for the upward move. Therefore, a long position is recommended for a medium-term investment strategy. An ideal entry price would be around $0.247, near the support level, allowing you to capitalize on a potential upward movement. The stop loss should be set at $0.245, slightly below the support level, to minimize potential losses. The target price could be set at $0.265, aligning with the forecast and aiming for a reasonable profit margin. This strategy allows you to participate in the potential upside of Tron while managing risk effectively. Based on the provided price history and forecast for Suncoin, a cautious short-term investment strategy appears most suitable. The recent price action shows a downward trend, and the forecast predicts further declines. While the support price at $0.01976 offers a potential floor, the resistance level at $0.0211 suggests limited upward momentum in the near term. Therefore, a short position with a conservative entry price at $0.0208, close to the current price, is recommended. The stop loss should be set at $0.0211 to minimize potential losses if the price unexpectedly rises. The target price should be $0.0198, aligning with the predicted price decline and providing a reasonable profit margin. This approach aims to capitalize on the anticipated downward movement while managing risk effectively.